Good evening, everyone. This is Rodney with the Triton Wave update for Friday, August 10th, 2012. Okay, I want to spend a little time on what's going on with the market. On the left-hand chart is the S&P. It's butted up against this trend line that that goes back 1 year. It's butted up 1, 2, 3, 4 times in a row. It actually finished over 1400 today, after being at 1403.50. It finished at, I think it finished at, it finished right at 14. It was at 1403 during the nighttime. Yesterday it hit 1403. It's very lethargic. So the question becomes, if you look on the right here, you're looking at the 21-minute cash price. All the waves, 1, 2, and 3, 4 is heading down, 5 is heading down, 1, 2, and 3 are under. So it becomes a battle of do we follow the waves as they're going up on the daily chart, and like a slow drift up, and it is a drift because there's hardly any participation in the market, or do we follow the more rapid waves, which are the 21-minute, that seem to be having these nice sine curve highs and lows through this trend line, through this double parallel trend line that appears also on the left-hand side. So that's basically the question: which way are we going to go? My tendency, last night I brought up some the charts of the vol spread and the tick, and I wanted to take another look tonight. Okay, so if we look like as we did yesterday, going all the way back, there hasn't been a 1,000 tick reading since August 6th. No 1,000 tick readings yesterday, no 1,000 tick readings today. It fell between plus 600 or 700 to minus 600 or 700. Every time it started to go up, it fell back. And the vol spread, I thought it was lethargic and lame yesterday. It was even more lethargic today. Less than 500 million shares traded on the New York Stock Exchange, and a vol spread of 127 million. So that means there's 127 million more shares that traded up than down. Very, very marginally thin trading. In other words, there really is no conviction about the upside. The bulls can't get it going. So where is this market going, and what's the potential? And as I said, does it drift higher, and then we get some more buyers in here, like CNBC seems to claim? Or do we just turn around and cut this loose? And my own feeling is that we have spent a lot of time up in this area, 1, 2, 3, 4, 5, 6 days trying to get through here, and the volume keeps getting less and less and less. And they're basically waiting for Bernanke to give the green light that he's going to fund this economy a little bit more to keep everybody in stocks on the upside, but that I don't think is going to work. I don't think he's going to do it, and I don't think it's going to work even if he does it. So what's the potential for a downside here? The potential is that we could actually wake up tomorrow or Monday or Tuesday and we could be down 20 handles. So what I'm suggesting is that since moving to the upside the last 5 trading days has been painful and very little upside movement, that you start taking off your long positions. And if nothing else, cut them loose and just wait for the next move. Because even if we go up some, we're not going to go up that much. But the potential for the downside is much, much greater. I easily see the first leg being 1375, but on a bigger picture, wait a minute. Okay, let me see. On a bigger picture, I see this very possibly coming down to this bottom trend line before there's any kick up, which is on the 144 exponential moving average. That brings us back. That's 1340. I realize that is a 60-point drop. It's equivalent to 600 points in the Dow. It could happen very rapidly. What I mentioned was an analogy to chess. This is a rook or a castle formation. And that's one side of the wall. This is the other one. I wouldn't be surprised if it just shot right down here. So be very, very cautious on the upside. Now let's take a look and see what some day trading possibilities were today. On the 1597 tick chart, there's some moves up on the initial wave. Well, actually, you got in here, you took a little bit of heat here, but you rode it up, came down. Let's look at it. That's not a very good wave there. Okay, so this one's a little bit. This is the 987 is a little bit cleaner for day traders. So if you got in right at the opening at 8:30 and took it, you could have ridden this up all the way on the first wave when it quit at 1401, taking it down to here, and then either bail out on the equivalent low where it started the day, or when this starts turning up, or wait till it comes back up here, and at about 1397 to 1399. And right now it's showing on the downside, we're down 225. It's 7 o'clock Eastern time when I'm recording this. And T1 on the 987 is down. T2 is heading down. T3, 4, and 5 are all down. The 1597 T5 is down. 4, 3, 2, and 1 is heading down. This could all happen tonight. Could be happening overnight. All right, moving on. Okay, moving on to Goldman Sachs. That's trickling its way up. It has kind of the same. It has same kind of not cash price pattern, but wave pattern as the S&Ps. So it's been following the S&P. It's a nice move up, a little bit at a time. In the meantime, the 21-minute is hovering right about 103. Actually, this 144-minute is a resistance. If that can get through 103.60, there's a potential of going to 108. Or you can just wait for T4 to roll over here, and we could come all the way back to 100 very, very quickly. Okay, Amazon, after a long wait after this tremendous 40-point move, it kind of threw the waves off. The waves are starting to come back now. So one of the things I watch on a daily chart is when it goes below 0, above 0, and then below 0, and the part below 0 is a lower high than the cash price. So this would be the green line here, measured at this high, and then a much lower high here, and against a higher cash price. So as soon as this goes, and this may take a couple days to develop, but as soon as T1 on the daily goes below 0 on Amazon, it's confirming the waves that are in a nice motion here. They are all below. T1 through 4 is below 0. T5 is about to be below 0. So I see that coming down to at least 229, and actually it might even fill this gap, 223. Okay, the daily on Netflix is, I don't like the daily. 21-minute is hasn't done much. Well, it's gone between 57, 52, back up to 59. Doesn't look like it's going to hit that 63 though. And already T2 is probably 1 or 2 hash marks on the 21 minute. So that's like 40 to 60 minutes of that's three hash marks or 3 candles before that heads below 0. That's heading back down to 54. Okay, looking at Apple, rounded formation top. It is heading higher. I don't know why it says that it's up 3 today, because it closed at 619.80 yesterday, and all of a sudden it was up 3 points, but it was actually up only, the cash price was only up 20 cents. So that may have been a dividend payment or something that I don't know about. This looks like it's rolling over. It's already made a 28, 38, 48 point move. This, if you look at the 21 minute, what I was looking for was some confirmation besides T1. So T2 happened, T3 is happening, T4 is not happening yet, but if you look at the 1597, the one that's actually parroting almost exactly the cash price, it moved up at 572 and started moving down below 0 on T5 on the 1597 tick chart at about 620. So it's just kind of just like waffling back and forth. T1's going a little bit above 0, but that in a big drawdown in the stock market, this could easily come back to 600. Wouldn't take very long to do it. Okay, so no matter what position you take, you have to make sure that you have your own what you decide as a stop that you're comfortable with living with. So if this doesn't come down to 600, but it takes up to 640, you know, you have to make a stop above these old highs here, so that you don't get caught. These waves tell a story. It's like it's like standing in the ocean. They look great. Most of the time they work, but when they don't, you don't want the surfboard smacking you across the back of the head. Okay, back to MasterCard. It was up like 8 points, 7-8 points yesterday. Up another 1.5 today. It was actually higher. It was as high as 127.86. So it finished like 2.5 points off the high. And the 21 minute does not look bad. Would I want to buy it here? It's right at resistance. It's gone pretty much sideways for 2 days. Well, if you crunch the chart up, it looks sideways. But it actually 6 points down, 8 points up. But on a big chart, T1 is below 0, T2 is below 0, T3 is below 0, T4 is below 0. And the long wave on T5 is just right, just nibbling at 0. So I would not trust this on the upside. I just don't have a good feeling about it. I'm going to leave the target alone on that. I just don't trust it to the upside. It's not something I'd want to play if I think the market's going down. Rather, it's not something I'd want to play in the upside when there are opportunities for a lot better stocks on the downside. Visiting GLD here, the gold ETF. The waves keep going up. The 21 minute is more positive than it is negative, and it seems to be trending up. But this wall of resistance of all these exponential moving averages, it doesn't matter if these waves are going up, the price is just not doing it. So I don't consider this a buy until it breaks through 157 on the upside, comes back up, goes above it, comes back up, kisses it, and then takes off. We'll have to wait and see if that happens. Other than that, I would not touch the stock. Okay, and we have Google. Google's taken off from in the past 2 weeks from 560 to 650. So it's up 12 cents today, which is nothing day. If you look at the daily, all the waves look good to the upside. If you look at the 21 minute, when it took off, you can look at the left-hand side as I'm moving the cursor here. It's synchronized actually with T1 is synchronized with T1 is synchronized with the 21 minute. T1 on the daily is synchronized with T5 on the 21 minute. Doesn't always work that way, but it happens to be that way right now. When that took off, we were at 576, and we've been up here going choppy sideways for. It's been like that. That's been the support. That's been resistance up here, within a 10, 15 point range. What I did notice is that T5 on the 21 minute is now below zero as of, let's see when it happened, as of 14:06, which is 2:06 Central Time. So that would be 3:06 Eastern Time. Went below zero. It went sideways after that. It closed at 642.35. That is short term. After this humongous move up here, let's do a 50% retracement and see if this works out here. 50% retracement of high to low. 50% retracement puts us at 600. At 607 and a 618 retracement is 597. So a 382 retracement is 617. So not really hard to believe that this could come in a market sell-off, that this could come down to 622, which is a 377 moving average. So we're talking 20 points. The easy part would be 20 points. After that, it's like we'll have to check and see what's going on. It'd probably be a little bit lower, probably be about 617, because this is a line of tops here and the bottom here. So between 622 and 617. But that, when the market starts moving down, that would be a great short or buy in the money 0.71 delta, and is actually, unless you're playing weeklies, I would move out to September options. All right, somebody asked me if I would look at Intuit, and let me see. Intuit, you know, has a long history of going up. So you can't really get too much off of the daily chart. It moves between 60, 65, 55, back up to 65. Really doesn't do much. It's not a big trading stock. But if you look at the 21 minute, it looks kind of interesting, because what I'm looking at here, and just what I pulled up on this screen, is that you know, if you were buying some options and you saw like T2 moving above right here, nice little cross here, very clean. 57, and it moves up to 60. So if you had like 55 calls, that's like you'd be with a delta 71, 65 to 75. Then mostly, if this moves $1, your option would move 3/4. So if this moved 3 points, you'd have 2 1/4 in there. And then when it moves down, you can play this down. It's a nice very rhythmic stock to play. As you can see, where all the T1 just almost gives you exact entries. It's really nice. This looks like it may come down to 58, maybe a bit lower in a sell-off. Looks like this is coming down again. It's actually not too late to get in it, but the better point would have been around 59.95. I'm going to look at one more here. Okay, if I were to look at LinkedIn, there's really not enough information on the daily because it's a relatively new stock, and these waves need more. They need more data. But some interesting trades if you're just doing the 21-minute, you know, like scalping a few points, 99 on this move on T1, 99 to 106. You know, like 106 down to, well, until this came above zero, to about 90, back to 99. This moving up a little bit, even though you would have missed some of that. On the downside, 102, 102.9 to 91, and then it's just, as soon as this starts curving around, I don't know if you can see the curve on that T. This is a good time to get out when you see T1 start moving around like a teacup to the upside. Then you know it may has a potential of popping. Of course, if you didn't and you waited to get out, even if you had this profit, then you would have broken even here. So nothing really going on here. There's a little sell for a few points, 108 down to the 377, 104. Well, that wraps up for tonight. Have fun trading. Hope you don't get caught in the downdraft if we have one, unless you're on the put or short side. And the next update, this is Thursday, so the next update will be Sunday evening. Have a great weekend and great trading, and I'll see you at the next update.